So let's move on to the next question, which I think we'll have a bit of fun with. I must admit, when we were planning the panel a month ago, the questions, this question I was going to have either at the end or not at all. But the recent U.S. election, I think, surprised many people around the globe. How will a Trump presidency impact real estate in Canada and the U.S.? So maybe, Andrew, I can start with you. How will Trump impact how and where Grosvenor may invest going forward?
Well, Grosvenor is, as you probably gathered, a long-term investor. So my quick answer to that is I hope he won't be around long enough for us to have to make any long-term decisions, and that's probably about as rude as I'll get. He's an interesting character. He's I mean, if you can't believe anything he says. Forget about mendacity. I don't think he believes anything he says. He brings a level of uncertainty into the process which is absolutely unprecedented. Now, you balance that off against the fact that he said he's going to run, what does he call it, neutral deficit spending. So he's going to lower everyone's taxes, and he's going to come up with a great big infrastructure program. And because he's wonderful, the economy will grow, and so there won't be any deficits. And this is what he needs, of course, to get the Republicans to go along with him, because the Democrats have been pushing a stimulus for years and not getting anywhere. But Donald Trump's stimulus is going to be way better than Hillary's, not least of which is because it's going to be twice as big. But of course, he's with Donald Trump, it's not simple. Because in order to keep the Republicans happy, it's going to have to be some sort of private-public partnership. So the guys he railed against on Wall Street are for sure going to be involved in this, right? It's also going to be very complex because he's promised a lot of people that manufacturing jobs are going to be in the U.S., which means that you're going to have to write up a public-private partnership. You're going to have to write up a lot of very complicated documents which limit who your suppliers are, and who can work. You're going to, I mean, a real estate lease or a real estate document is easy, compared to something like a trade agreement. And he wants to tear a whole bunch of them up, and hopefully not least, the easy one is going to be the Trans-Pacific Partnership. You can just say that's going tomorrow. Troublesome for us is obviously the North American Free Trade Agreement. It's probably, I think he will take a while to get to that, and I actually think he may have a net benefit in Canada. Softwood lumber is not going to be good for us, but he'll probably get Keystone XL built because that's the kind of thing he wants to do. But in terms of, given the breadth of the stuff, which will take a long time to take effect, because it's not so-called shovel-ready, it's everywhere. It's infrastructure, it's roads, it's water, reservoirs, I could go on, but lots of different things, all owned by different people. He wants to do it in a complicated way, so it's going to take a while. Now, in the meantime, the economy is tightening. We're at or near full employment, thanks to Mr. Obama. In fact, I don't believe that. I don't think a president can actually create the conditions. So it's an exaggeration to blame him or to praise him. But in general, I think the U.S. is probably going to do quite well in the short run. Canada will do well as a result. The danger, of course, in all of this is that the Fed, somebody said the inflation is still low. It's actually not. Core inflation's been running over 2% for over a year now. And the Fed has got, the Fed is still worried about inflation, even though it's been a long time since we've seen inflation. So there is a possibility that you're going to see some tightening, and that could cause him problems. If things start going well, he probably will leave the trade stuff alone because that's complicated and will take longer to get to come in. But if he can get, an infrastructure thing going, that's fine. But in answer to your questions, none of that would change where we are. We go from to markets for completely different reasons. Which is we think these are good markets in the long run. We think the U.S. economy, no matter who is in charge of it, is a good economy in the long run. As a matter of a practicality, I can't turn around and sell everything and move it to another country. And we believe we're in the best markets that you can be in. We can talk about that later. Anyway,
that's interesting because of the three panelists, your company Grosvenor is the only one that's in the U.S. and in Canada in terms of your investments. So you're not the election result's not going to cause you to make a wild shift in your policy.
No.
Okay. Thank you. So Don, will this help or hurt GWL investments in Canada? And is GWL considering going into the U.S.?
Sure. So I agree with Andrew. The Donald is definitely pro-growth. And if you kind of think about what his policy objectives are, which is a tax break for corporations and for every single person who pays tax in the U.S., and you think about what the power of that is in terms of translating into consumer spending, $1 trillion in infrastructure. I don't believe that he'll actually be able to accomplish that objective, but they're going to dial up infrastructure. I think that's pretty certain. And deregulation in the energy sector and in the financial services sector also likely is a stimulus to the economy. And anything that helps the U.S. economy is good for Canada, given that 75% of our exports go to the U.S. marketplace. There's obviously been a lot of rhetoric about NAFTA. I think it's a fantasy that you could actually rip NAFTA up, to use Trump's terminology. That is not going to happen. There's $2 billion a day of goods and services trade over the border, and Canada is the #1 export customer for 35 of 50 states. There's millions of U.S. jobs that are reliant on the trade arrangement between America and Canada. So it's unimaginable that all that material is likely to happen, but there probably are some changes coming on the margin. I think I'd be a lot more worried if I was in Mexico. So I think it's going to be good for real estate in Canada because we're going to feed off some of that incremental growth. And as it relates to who the U.S. president is, I think we're agnostic in the end. But we are working on an initiative at the moment to create a platform in the U.S. So we're pretty excited about that.
Despite the election results.
Yeah.
Thank you, Don. So John, all of your real estate investing is in the U.S. How will a Trump presidency impact your future decision making?
You say that as if I'm a trader. I want to say clearly, I love Canada. I feel it's been a privilege to be born here, raised here, and I'm staying here. I do think the election of Donald Trump will make a difference. I wasn't for him either, but it is what it is. And I think the impact, I've been asked this question several times in the last week and a half. I think in some ways, the impact on Canada is bigger than what the impact is going to be on the states. I think and I think Canada has enormous potential as a country. But I think there's a moment of truth this election is going to bring to the forefront on two specific issues. And I just want to sort of paint a picture on the context on why it's important, and then I'll get to those two issues. But I think it's going to tackle these issues is going to require political courage that we've not required of our politicians in the past. They're going to need the support of all of us, the media, because for some Canadians, I think it's going to really challenge some long-held beliefs. There's been, well before this election, there's been some tectonic changes going on in terms of the U.S. competitiveness situation. And it's interesting, I heard from an American who came up to be a CEO of a large Canadian company. And he was asked the question, what's the fundamental difference between Canadians and Americans? And his answer was, well, Americans love their companies and they hate their governments. And Canadians love their governments and hate their companies. And I think that dynamic in Canada, in order for Canadian companies to change, particularly with the drop in the corporate tax rate, is going to be a high priority. If you look at the U.S., there are cultural differences that are deeply ingrained. Some of the states, not all of them, are unbelievably fiercely independent. They view themselves as independent countries. When you look at Texas, they say there's a slogan, don't mess with Texas. And that's more than a slogan. You know that Greg Abbott, who is the governor of Texas, has sued the Obama administration 44 times. Can you see Manitoba suing the feds in Canada? I don't think it's going to happen here. 97 times, various governors have gotten together and sued the Obama administration, basically saying, stay out of our backyard. 5 years ago, when it started to become obvious to us that the U.S. was hurtling towards energy independence, we wrote a note to our investors and we said, we're not sure, this is not going to maybe change everything, U.S. energy independence, but it's going to change a whole lot. It's going to change the competitiveness of the states. And from a geopolitical perspective, and what you're starting to see with this election, we said it's basically going to allow the states, not because they're bad people, but they're just going to care a lot less about everyone else because now they can afford to. Look at the competitiveness. The U.S.'s industrial electric prices are half right now of their major trading partners. Their natural gas prices are a third of their major trading partners. And if you look at manufacturing jobs, there's a lot of talk about it. Our government has said they want to attract manufacturing jobs. Well, they're no different than any other government in the world. Everyone wants, developed or developing countries want manufacturing jobs. And there's a reason for that. There's two reasons, I believe. One is manufacturing jobs create a much higher rate of productivity growth. So productivity growth is probably the magical elixir to creating a prosperous society. Manufacturing jobs grow productivity levels at 3 times that of service jobs. They have a higher job multiplier. So every manufacturing job, and I include software developed in this besides metal bashing. Every manufacturing job creates 3 other jobs in the economy on average, whereas every service job only creates a half. And so as well on this, I think manufacturing jobs are very, very important because they're a proxy for the overall competitiveness of a country. Because manufacturing jobs can move, service jobs can't. And so around the financial crisis, I'm going to lead up to this point, but around the financial crisis, a number of states got fed up with losing manufacturing jobs to China. And they made some dramatic changes in their labor laws, employing things like right-to-work legislation and at-will employment legislation. To the point where in 2015, Boston Consulting Group, their international manufacturing competitiveness practice, stated that select southern U.S. states were as competitive on a cost basis with a broad manufacturing list of goods with China. And the U.S. is the only developed country in the world since 2010 to actually grow its share of GDP from manufacturing. Not even the mighty industrialists in Germany have been able to achieve that, even with a depressed euro. So the World Economic Forum in 2014 or 15, I can't remember the exact year, comes out with a listing of competitiveness of countries, and they do 144 countries. And the U.S. comes out as number 3 and rising. And I think it was Singapore and Switzerland were number 1 and 2. And Canada comes in at number 15 and declining. And, it doesn't really matter what the other 12 countries are between Canada and the U.S. I think, as Don said, 3/4 of our trade is with the U.S. That's all that matters to us. So how has Canada done? If you look at manufacturing as a bellwether, manufacturing jobs in Canada have gone down since 2002 by 632,000 jobs. That's 27% of the manufacturing base. Ontario lost 33% of its manufacturing base during that period. That's sort of Italian-level deindustrialization, and you certainly don't want to be in that group. So here's where Trump comes in to all that. That's the context. So these are things that he's had nothing to do with. In fact, Barack Obama has had nothing to do with. As Andrew did say, you can't pin the faults on the president as much as happens, and you can't give him the credit. This is all happening in the states who view themselves as individual countries. But Trump comes in, and what's he going to do? And I totally agree. He's going to do a lot less than he said he's going to do. But he's going to look for, he likes to win. He's very determined to win. He's going to want to put points on the board really early. And what's one of the first things he's going to do is the corporate tax rate. right? So he's got bipartisan support. Even Bill Clinton during the campaign said, Hillary didn't say it, but Bill said the corporate tax rate's got to come down. I don't know if he's going to get it to 15%, but he's going to get it down. And I think he's going to get down fast. So I think I know things don't move fast in government, 2017, maybe 2018. If it takes to 2018, I think he's going to backdate it, and then he's going to telegraph that so he can get the capital moving in. You know, the one thing, we talk to a lot of international investors, and the one thing that they say that's the Achilles heel of the U.S. economy is this 35% tax rate. So that's going to get removed. And it's going to cause, I think, a tsunami of revenue or of capital to come into the States to the point where I'm concerned it's going to be hard to find good deals there. So this is where I think the two moments of truth for Canada are. One, it's got to drop its corporate tax rate and drop it soon. If the States does drop it to 15%, I don't think the 15% is adequate. Why? Because we were bleeding manufacturing jobs to the U.S. when Canada, I guess the Ontario rate, blended federal provincial was 26%, the States was 35%. So I think just matching, if they drop it, is not going to be good enough. And then the really hard question comes into to play. What are we going to do with our labor laws? Because they're not flexible. I think it's completely naive to think that Canada can compete for manufacturing jobs effectively with the United States without having right-to-work states, which makes it difficult for unions to form, and at-will employment, which means you can hire and fire at will. You can do those things in Canada and put a social safety net underneath it to protect it. That's what we want to do as a society. But I can say that with confidence that you can't compete for these manufacturing jobs if you don't do that, because look what happens with Illinois, with New York State, with California. They can't hold on to their manufacturing jobs relative to the southern states. Now, to answer the question, what's going to cause me to change and want to invest in Canada? Those two things. If Canada gets those two things in place, the thing that I find extremely frustrating as a Canadian is that Canada's already done the hard part. We've got an unbelievably good education system, much better than the States, and that's not just my opinion. That's on the international ranking. I mean, building a good education system, that's the tough stuff. Lowering the corporate tax rate should be easy. Politically, changing the labor laws, I understand is difficult. But I think Canada has enormous potential if we address those two things, and I think it's brought it to the forefront this election.
Thank you, John. I like the idea of lower tax rates in Canada.
Of course, no corporations actually pay that 35% tax rate.
Well, we are.
They've all got deals, but which courtesy of their congressman, industry specific. So,
I agree. It's a mess.
Yeah,
It's a mess.